Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and happy Friday to everybody. Today is also June 1st. We got a lot of data to go over. Today's the big day. We got the jobs numbers today. So we'll start with the non-farm payrolls, the big numbers that are brought to you by the Bureau of Labor Statistics, or BLS, for the month of May. So April was revised. It was actually revised lower by 1,000 jobs. So it was at 164, dropped to 159. But the previous month, back in March, it was actually revised 20,000 more. So we actually had with the revisions from the previous 2 months, we had a plus 25, or sorry, plus 15,000 new jobs created. But for the month of May, we had a forecast of 20,000 and came in at 223,000. So very good numbers here that we're seeing in jobs. This continues to impress the markets here. And as you can see from unemployment rate in May, we went from very good numbers at 3.9%, which we expected to have it at, and it dropped even further down to 3.8%. This is the best in about 10 years here. We've also got the U6 number dropping from 7.8% down to 7.6%. That's the best in about 17 years. So we're getting some very, very good job numbers here. And as we've mentioned throughout, last surveys, their biggest concerns lie with finding qualified skilled labor. So finding that labor is which is the biggest concern, which we haven't had that for a long time, right? Also good news is average dollar earnings. So in April, it only went up 0.1%. For month of May, it went up, well, the forecast was supposed to be 0.2, but it came in a little hotter at 0.3%. Now, this is up, I think, 2.7. So it went from 2.6 to 2.7 year to date, average hourly earnings going up. Now, we also have average weekly earnings, which I didn't put in here. That also went up 0.3% and went up 3% year over year. Now, that's kind of important, maybe even a little more than hourly earnings, because we got a lot of people who are being, it seems to be the trend where a lot of people are being put on salary. So they're working more hours, but not getting paid more as a result of it. So as a result, since we have a lot of those people, they're not being factored into this average hourly earnings report here. So again, people are making more money, which is a good sign. Also, we haven't heard, this is going to add to the talk about wage-based inflation. It still seems moderate. It's not like really getting extreme, but it's starting to show up where before we had no wage-based inflation whatsoever. It was pretty flat for a long time here. So let's move on here. We got the ISM Manufacturing Index. So this, of course, is the manufacturing industry or sector, and anything above 50 is considered optimism or expansion. We had a pretty good number in April at 57.3%. It was supposed to have a pretty good uptick to 58.9. Not quite to the expectation, but pretty damn near right in line with that, 58.7. So very good numbers here in manufacturing, as we saw yesterday with Chicago jumping up quite a bit. And last but not least, we got construction spending, for the month of April. So March was kind of not so good. It pulled back about 1.7% in its spending. Forecast for April is 1% and exceed that at 1.8%. So again, good overall day here on the data count for data wise. So headline news, stock market is liking it, what they're seeing. Stock market's taken off. It's kind of rebounding from yesterday. We're basically closed down 200 on the Dow. Now we're up like about 200. So it's basically kind of a wash from yesterday's losses, kind of like what we had on Tuesday and Wednesday. Tuesday was really down, and then Wednesday rebounded. Thursday went down. We're rebounding again on Friday. So we're almost getting kind of a wash for this week, it seems like. Also, things kind of add to it is Italy formed one of the things that, of course, that was what kind of hit us on Monday or Tuesday was Italy. There's concern about the government, and it looks like that the different factions that are forming a coalition government, so that will potentially not lead to any elections this summer, which could really make things even worse for them. And that's primarily because they're concerned about the status of them remaining in the euro. There's a lot of sentiment that's kind of pulling countries breaking from the EU, and this is kind of a step in the positive step to keep them with the EU. Let's kind of head on here to the bond market. And bond market, of course, as we said a couple of days ago, we had the negative stochastic crossover. So as a result, it's been pretty accurate on its trend. And like I said, after a couple of days ago when it hit, it started reversing downwards. Right now, we're down just below this Fibonacci level. We have a double floor of support here with the 25-day or 50-day moving average and this Fibonacci level. And right now, we're just hovering between it. So we've been testing this 50-day moving average. We were down about 19 basis points earlier. Since then, we've kind of rebounded back to about 11 basis points, being down from where we left off yesterday. For the most part, it might, for most lenders will probably have a pricing for a little bit to the worse. They'll probably urge to the more conservative side, so they'll probably give a little worse pricing than what we saw yesterday where we closed. But again, we'll have to kind of wait and see where we close. If we break below the 50-day moving average or somehow rebound a little bit further, again, this is the trend, the stochastic crossover, so it looks like we are giving up some of the gains we had previously gained, and we'll have to kind of see as to when that may cross again. Same thing on the Treasury market. Treasury market broke above the 100-day moving average. Now it's testing its 50-day moving average, and right now we are up about 2.91, I believe it was, percent here. All right, so I'm sorry, no, actually we're down 2.89 here. Excuse me, sorry about that. We were earlier up about 2.91, but now since when we kind of pulled back a little bit here, about 2. It's 88 or 89, some of that, right? Almost about 2.89 here. So that pretty much wraps things up. I hope you guys enjoy your weekend, your day, and if you guys want to get more information as things pop up throughout the day, I do post it on Twitter. You can just find me at Mike Bjork. Again, I hope you guys enjoy your weekend and day. Thanks so much for watching. We'll look forward to see you guys on Monday. Bye-bye.